I'm Marguerite, and I'm from Move to Tacoma, here today with my friend and colleague, Anders Ipsen. Nice to see you again, Anders.
Nice to be here.
So we're going to talk about investing in Tacoma real estate in 2021. Like, the realities of this market are different than they were 5 years ago for sure, even a year ago. So if someone is thinking about buying an investment property in Tacoma, what's the big thing you want to get through to them?
Well, some things are timeless, first off, and the most timeless thing is your goals. Are you more of a buy and hold person? Are you looking for an appreciation upside? Do you want to buy the worst house on the block and improve it and let your neighbors improve your value for you? Or are you thinking more about making money into the long term? So those are the timeless things that always inform your decision, but like most situations, what makes this market condition more unique is just the usual: supply and demand, interest rates, and market factors.
Well, one of the things I appreciate about you, Anders, is that you have, you've been an appraiser forever, and you have this extensive background.
9 years.
You have this experience with the numbers that a lot of agents, as much as we would love to, we don't have the depth of experience and knowledge of the numbers the way that you do. And I know that that is a very important factor for most investors, and especially for folks that are looking to invest in multifamily. So looking at the numbers in Tacoma and in Pierce County in general, what do investors who might not be as familiar with our market need to know?
So you have to know, and in some ways, ironically, because people get intimidated by numbers, but ironically, multifamily and investment properties are really easy, because if you're making decisions based on what good numbers are for your goals, you know immediately what's attractive, what's okay, and what's your walkaway price, just by working backwards from your profit margin. So for example, a good multifamily rate is around 6% around Tacoma, Pierce County. That's considered pretty profitable. You're increasingly not getting that. It's usually starting to camp out in the fives. Like you won't find a duplex anymore for anything north of maybe mid 5% range cap rate. But knowing that, if that's still something you want to bank on, because it's lower because buyers are banking on rent going up, even accounting for COVID regulations, and they're counting on values going up. I was talking to an appraiser the other day from Seattle about how everything is in the fours now, up around Queen Anne, for example. So just looking at that factor, you just have to understand where the numbers are and working backwards from that, what makes sense for your budget and for your goals.
So it used to be that our market was one where investors from out of area and from out of state would see a lot of opportunity and a lot of bargains. That's not really the case anymore. I mean, we've been the hottest real estate market in the country for several years.
Right, and in some ways we're starting to feel the King County treatment, where we're being displaced by places like Thurston County as the hot new affordable market, right? Now Tacoma and Pierce County is more the established, getting pricey market, and we're kind of where Seattle, King County was a few years ago, and we're starting to be displaced in that role.
That's interesting. So as far as multifamily goes, if you have somebody who's maybe local to Tacoma, who's looking at buying their first multifamily property, a duplex or a fourplex maybe for a first timer, or something beyond, what is it that they need to know about buying a duplex, fourplex, or beyond here in Tacoma, Pierce County?
Sure. So it depends on who the buyer is, first off. So one of my niche areas, actually, in working with Marguerite, for all you out there in TV land, is there's actually a tremendous killing you can make being an owner-occupant. So I work with a lot of VA investors, actually. That's a thing. If you're a service member or a veteran and you have a VA financing opportunity, you could conceivably move into a duplex for nothing down. I repeat, or FHA, right?
I bought my first duplex with an FHA loan.
3.5 down, yeah.
Yeah, and so I mean, maybe that's why we work with so many people, because this to me is not strange. This is a great way to get in the market when the market is tight.
And the interest rates can't be beaten. If you're VA, there's no PMI, so it's terrific, right? And even something more on the higher end of the range. Like recently, I helped someone close a fourplex in Puyallup. He got a great deal too. He got like $30,000 in concessions from the seller, and a new side sewer too. And he's a cool guy, Apache gunship pilot. He got something there, and he only had to pay 5% down for an almost $800,000 fourplex.
So what are the FHA and VA loan limits for fourplex? Because fourplex is the most you can get when you're going
Yes.
FHA or VA. So where are the loan limits? Like, what is your price ceiling on those?
So it depends on the buyer, right? So if your credit is strong, if you have assets, if you have experience as an investor, that's another thing a lender looks at, then sometimes it can be nothing, sometimes it can be as low as 5% if you're buying something larger. And if you're less experienced, if the lender thinks you're higher risk, you might have to put a little bit more down, maybe 10% or more.
But what about the purchase price?
So the purchase price is based on the FHA allowable limit, which is stretched really high up here. I mean, it's pushing into $1 million almost for multifamily.
Okay, that's the number I was looking at. So for FHA and VA, I mean, you could be looking at a $800,000 triplex or...
I had a VA buyer you sent to me last year who was pre-approved, who according to his lender could buy into the millions. You know, 1 million or more for multifamily.
That's
so
interesting.
That's one of the bigger differences between buying multifamily and single family, regardless of if you intend to own or occupy or not, is that it's not just about you, it's about the property. It's not just you, baby, right? so with the property, what they're looking for is, does it cash flow, and is it a stable investment business-wise? So it's almost like a commercial loan in that respect. And it's a great opportunity as a buyer because not only are they looking at your income for the loan application, but it's the property's income too.
And this is something I kind of want to linger on, because this is what blew my mind when I was buying my first place and ended up getting a duplex. It was like, oh, so the lender takes into consideration the rents that the property is collecting from the other side. If I'm living in one half of the duplex and the other side has rents, they're considering that in my
Correct.
approval.
So you're buying a fourplex, for example, and let's say you're a conventional buyer and you just want to have a property. You're not going to live in it. So if you're buying a duplex, you can buy as low as 20% down. If you're buying 3 to 4 units, it has to be a 25% down payment.
Okay.
If you're a conventional buyer, not owner occupied. So let's say that you make a certain amount of money and the lender is looking at what's called your DTI, debt to income ratio. They're also going to factor in the rent coming in from that property as your income for your loan application. And furthermore, if any of the units are vacant, that's okay. They're going to factor in the market rent, you know, what you could charge for that unit, and then just credit you about 75% of the market rent for that property. So either way, it's going to count.
So if you are not like a conventional investor and you're an owner occupant, so let's say I was one of your like cool Apache helicopter pilot
Thank you for your service.
buyers, and I'm buying a fourplex, and let's just say like the payment on that fourplex is something like, you know, owner occupied is something like $4,500, $5,000,
A little bit more than that, but it depends on the price.
Okay, so let's say it's $5,000 a month, but if all the units, if it's 4 2-bedroom units and they're all rented for $1,500, so you have $1,500, $3,000, $4,500 in rents, and you're paying the difference on that remaining unit, and hopefully saving for a rainy day if you have a vacancy.
Well,
right?
you got to have cash reserve. That's the other thing too.
Okay, so let's talk about cash reserve.
Typically, it's the equivalent of 6 months worth of payments because things break down. There are COVID restrictions and any number of things that come up, and the lender wants to know that in the event of something bad happening, that you're a lower risk of default. So,
And that would be 6 months of the mortgage payment itself in cash reserves.
yes, and those don't have to be cash in your bank account. They can be stocks, they can be a retirement account, they can be a gift,
Okay.
among other things.
All right. Well, this is one of the reasons that I like talking to you, Anders, is
thank you.
your brain is very creative and you do a lot of interesting things. And I think if someone is looking to get involved in investing in property in this area, like it's a different thing than buying a regular old house. It's a very different thing. One question I have that's kind of specific to the time period we're in right now would be COVID. Obviously, like there are eviction moratoriums and renters have a lot of additional protections right now because of what's going on in the world. What does that mean for investors? Like what should they keep in mind when they're evaluating a property, or how should they prepare?
It's extra risk at the end of the day. So just factor in your goals, whether it's the value that you want to have as a benchmark for the property, what your cash flow situation is going to be, and just factor it in as extra risk. You won't be able to increase things to market rent for some time. Even after the regulations end, there's still the 60-day notice that you have to give to increase rents, regulations on evictions for not for things that aren't non-payment or things like that, and just factor in the risk when you're making your decision.
So this is something that you will talk about case by case with your clients as you're evaluating a property.
Correct. I mean, as a multifamily landlord myself, it's something that I deal with my property manager, and at the end of the day, just talk to the experts and make an informed decision.
Well, this is why I like talking to you, Anders, is because you have this perspective on things. And I think if someone is looking at investing in Tacoma or Pierce County real estate, working with a specialist is really important. Like, our stuff is complicated and you really need a local expert.
It's not as complicated as you think if you just know what you want and you just work backwards from that.
If you're just really good at it.
Yeah.
Thanks for coming on, Anders.
Thanks for having me.